Now, let's take a look at the bigger picture with David Volpe, Deputy CIO and Portfolio Manager of Emerald Advisors. So, David, we've got a lot of headlines coming at us fast and furious today, the latest being on tariffs. So we got the SCOTUS ruling earlier today. It's a 6-3 in favor of striking down the tariffs. We knew that President Trump would work on finding other ways. So we've got the Section 232, that's sector-specific tariffs, so like the aluminum, steel. You got that. You've got 301. That's some other ways to implement the tariffs. And then now he says he's going to use Section 122. That's a more temporary thing. But how do you process what all this means and what it means for markets? The read-through right now is it seems to be positive. What's your take, David?
Yeah, Diane, hi. That's exactly it. So the market initially knew this was coming, was probably a little greater in that they struck down everything. They weren't supposed to strike down just the one section of IEEPA. They struck down all three, and initially went negative because they're concerned that, what's he going to do? He does have, as you noted, numerous sections of the law, 122, 338, 301, 232, which some of them take longer. But under 122, they can impose up to 15% for 150 days. So the good thing is he only did 10. So that's seen as a positive. And so while he's got a lot of bluster, so far, the response has been somewhat muted. And so we'll see. A lot's going to depend on what he says. Also, we got the State of the Union on Tuesday.
I know, exactly. So it's like, coming into this year, there was so many people I talked to that said expect volatility this year. And we've seen that play out. We've seen some choppiness. The tech sector has not been a leader for some time now. Is this normal volatility, and what's to be expected in this kind of year from your point of view, David?
Yeah, I guess it's normal. We had a great year last year for the market overall. And so it's not surprising that you'd have, some more volatility, although a lot of the areas of the market that were strong last year are continuing to be strong. Certainly not software and some of the large cap tech. But when you look at materials, you look at energy, you look at anything hard asset, you look at, AI infrastructure, which, certainly pulled back early in the year with DeepSeek and then a little bit later in the year. But the end of the year strong. Healthcare, incredibly strong. So, a lot of the areas of the market that were strong in 2025 are continuing on this year. Yeah, will we see more volatility because of actions like this, the midterms and the like? You probably will. They'll test certainly the new Fed chair. But, overall, the market is remarkably resilient.
Okay, yeah, and speaking of that resilience, we're seeing some resilience in members of the Mag 7, who one analyst characterizes as the Lag 7 now. We've got green on for Nvidia, Apple. Yeah, I mean, listen, it's turning into that right now, but not today. Alphabet, Google, Meta also in the green right now. Amazon's a big winner right now off the back of this decision on tariffs. It's up about 2.5%, and there were many who were calling for Amazon to finally catch up and asking the question, when will it catch up? But let's talk about catalysts coming up. What do you see as a catalyst? Is it all about Nvidia next?
Yes, it's going to be a big one. I look at Nvidia and it's remarkable. They're expected to do $66 billion. What if I told you they did less than that as a full year in 2024? One quarter they're supposed to do 66 billion. They did less than that 2 years ago. 60 billion they're expected to do on the data center, which equals what they did as a full year in 2024. So that's a huge catalyst going forward. And I like to say that for the rest of the market, beyond the hyperscalers and the Mag 7, their CapEx of the hyperscalers is the revenue of the rest of the market, including a lot of small and mid-cap names. So as that continues, those big spending plans, I think you just have incredible earnings catalysts as we go through 2026 for, again, many areas of the market that are related to AI, but are not the ones spending on the AI. They're the recipients of the spending. So that should be very, very catalytic in 2026.
Let me ask you this, David. So one of the things about Nvidia that's been a pattern is even if they have a beat and raise quarter, the street doesn't reward them. I'm sure you've noticed that pattern. Are you expecting that pattern? Are you expecting so you are expecting that pattern next week?
Yeah, I'm not. It doesn't surprise me. Nvidia, you can't trade it. You just can't. At least I can't. It's one that's been a long-term holding for us. And so, if it pulls back a lot, you can look at it certainly. And if it gets ahead of itself, but it's hard because this is one where it continues to get cheaper because the growth has been so strong. 2 years ago, nobody expected them to have 60% growth last year. No one. And yet they did. So, again, whether or not it's going to be in a big enough raise, they traditionally raised by a couple of $1 billion, we'll see.
How do you position now, given what you just mentioned and what we talked about, the lag 7? What sectors do you like this year?
Diane, we were lucky enough to be early in a lot of the sectors that have really shown all the innovation, particularly in the mid and the small caps. So whether it's in the materials, energy, AI, so AI power as a service, AI connectivity, whether it's on optical, cable, AI cooling, healthcare. Healthcare was a disaster. Going from the late 2024 to early 2025. We started an ETF, and I was like, oh my God, we're starting a healthcare ETF at this time. But yes, last year it was up 55%. It was like crazy. So healthcare has been extremely strong as people have just gotten used to the administration, and the approvals have been kind of okay. Anything hard asset, again, chemicals, titanium, rare earths. So there's a lot of areas of the market that are going to show tremendous earnings growth that investors can prosper from.
And David, I want to get a quick thought from you on this. It feels like it's become a footnote today, but we got that weak print on the economy, showing the economy only grew 1.4%. That was far below consensus, below any views that I'd seen. Is that something to be concerned about?
I don't think so. You look back, that was December. You had over 1%. Effect of the government shutdown. Exports were a little bit lower. So I think people see right through that. And you see with the market today, even with the inflation being 1/10 of a point, a little hot, people looking through that, the CPI was a little better. It relies more on housing. And so people expect that to normalize as we get into, go through Q1. So no, I don't think that's really an issue. I think people expect, again, we go back to the hyperscalers and the Mag 7, almost $700 billion of CapEx. Those are big numbers, and they do flow through the economy in terms of GDP. And so, no, I think GDP will snap right back. The lag in December from the government shutdown is going to be really a propant for the first quarter. So I don't think there's really a big impact there.
So you think that's a springboard? Okay. All right.
I think it's
we'll
a
leave it
springboard.
there. David, thank you so much for joining us this Friday. Have a great rest of your weekend.